Bitcoin's weekly candle has just closed at $105,690. This weekly candle is by far the flattest weekly candle we have seen since October 2024. These long-legged doji candles, although individually represent a large amount of bullish absorption throughout the week, are ultimately indecision candles. Printing after large uptrends may be indicative of possible indecision and reversals in the trend. In today's video, we are going to be discussing what this weekly candle really means for Bitcoin short-term and macro, how the charts are developing, our overall high time frame and short-term expectations, and the broader cryptocurrency market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in our VIP. To do that, click the pinned comment of the free channel, contact our admin, check out our entire 52-month plus trading track record, or watch a 10-minute video showing you inside the channel. You'll get access to trading setups with the exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart and education chat to the news, daily video, community trade setup chat, and help chat. Check it out. We'd love to have you in there. Let's jump into the video. So as we can see, guys, the weekly candle has literally just closed about 5 minutes ago. So we're jumping right in here to get a video filmed just right after that weekly. Now, as you can see, the weekly candle itself is a long-legged doji candle. Now, this simply means that the opening and closing price are very narrow, very small range, very close to one another. But if we're looking at the range of which the price has moved, particularly toward the downside, it is very large. So we saw this large correction downwards, followed by a lot of absorption, a lot of buying pressure, pushing that closing price just above the prior opening, again printing a long-legged doji. Now, like we mentioned in the intro, these are generally considered bullish candles because it suggests that during the week, although we saw a lot of selling, the absorption was able to pick back up. The buyers showed a lot of demand and were able to climb that price back up to the opening price of the candle. But when we're looking at it in context of the higher time frame, this would indicate a degree of indecision, particularly when it is centered just underneath the levels of critical resistance. In this instance, we're looking at the resistance at 106.4. So it does pose a risk that this trend is still exhausting and may run the risk of a steeper, or should I say a correction down the line, if this resistance is unable to break. So in essence, not really much has changed on the weekly, besides the fact that we have seen a week of immense volatility in the short term. Let's take a look at the short term and then we'll jump into the market data. So short term price section over here, as we can see, the price has been unable to break through that major level of resistance at 106.9 over here. 106.7 to 106.9, the level of which we need to break above for the bulls to be officially in control of the high time frame trend. If we break through this level, the expectations are we move back to 110,000. We'll come back and talk about this in just a moment, but let's move over to the data first. So taking a look at 24-hour liquidations and 24-hour volume, the weekend had very, very low volume. The volume is beginning to slightly pick up, but it is still overall very low at only 137 billion, up 2.8%. Liquidations down 3% at 96 million, with a near even split of 44 million in long liquidations and 51 million in short liquidations. Moving over to the DXY hasn't done all that much. If we zoom into the DXY here, we are sitting underneath 100. And the overall trajectory is still going to be downwards towards that 93 to 92 region over the course of the next 6 to 12 months. Again, how fast that plays out will be very much determined by what happens with interest rates. We've got the next interest rate decision in 10 days from now, and the current forecast is a interest rate pause. So we need to pay attention to how that changes moving into our CPI data, which is going to be in just a handful of days. Of course, we've got our CPI data coming out on the 11th of June, which is in 2 days time, and then following that we have got PPI data. So both of these events here have the potential to slightly alter the probabilities surrounding future interest rate decisions, and of course the big one being that decision itself in 10 days and the interest rate meeting, the press conference 30 minutes following, where they're going to be discussing what they plan and how that narrative is developing moving forward, which will actually have a larger impact on the price than the decision itself. So moving over to the S&P 500 here, the S&P 500 again has opened above 6,000. Great to see. Would love to see the price sustain above 6,000. 6,000 is now going to be a level of support over here, expecting continuations upwards provided we are able to sustain. If we're looking at the momentum over here, we do have a potential bearish divergence developing, meaning we have got higher highs on price action but lower highs on the RSI. This is not too much of a concern because we are still sitting above the support, but if we do drop below the support, it will become a little bit of a concern. So at the moment, bullish above 6,000. If we lose this level here, we might run the risk of corrections, but the moment while we sit above, we are looking pretty strong. Moving over to the other charts over here, let's jump into our Bitcoin charts really quickly just to go over what we're going to be discussing today. Like we mentioned, we're looking at our weekly charts, guys, discussing that weekly candle. We're looking at macro technical levels and structural levels, also talking about this VRPV here on the right. We'll be going over again the 4-year cycle very briefly as it is going to be relevant, as well as that 62.09, as yet again for another week we have managed to sustain above it. We'll also most importantly be discussing the short-term price action, zooming up on this price action right up here, the recent rally into resistance, how is this looking, what is expected, etc, etc, and of course the total cryptocurrency and altcoin market cap to finish off. So before we get into all of that, guys, make sure to smash that like button as we mentioned at the start, but also if you're interested in supporting the content even more, you can also join us down in the links below. You can go ahead and sign up to BitGet, BitUnix, or BingX. The exchange links down below will get you access to those exchanges, including a hefty sign-up bonus and 15% off all your trading fees, which can build up to 45% based on your trading volume. You'll also go to support me making the content, and of course you'll support yourself trading on an exchange I trust. Go ahead and check it out. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back in. Now, as we can see, the weekly candle's pushed up. We've had the weekly candle close, but there are still a few very important levels we need to break out for Bitcoin and of course for the total cryptocurrency and altcoin market. So let's run through those levels really quickly and then we'll come back to this chart here. If we're looking at Bitcoin, as we've already annotated through our prior videos, the most important short-term level we need to break through is going to be the point of confluence between the weekly downtrend, which is the downtrend diagonal trend line, and the horizontal level of resistance, which has been acting now as a point of resistance since the beginning of this month. We acted as support for about 10 days. Now we've been under this level for equally around 10 days as a point of resistance. This is the point of which we need to break through to see a continuation aggressively occur toward the upside, but not only to see that aggressive continuation, but to eliminate the potential of a correction from the range high. So the moment While we sustain underneath that short-term resistance, the potential for that 62.09 breaking down, the potential for the range high, the weekly range high being lost and us entering deviation from the range high and then a correction is still there. But if we are able to break through that region, the probabilities that these bearish triggers do not activate increase, which is a good thing for the market. Now, alongside that being a resistance, of course, that resistance lines up with the opening price of this green candle, the point of which we've been struggling to break through on the weekly chart. We have also got some key levels on the total cryptocurrency market cap, that being that weekly downtrend as represented by the downtrending diagonal trend line. And if we look at the altcoin market, we have got the prior higher low, which is represented by that $857 billion level, where if broken, will result in a continuation upward for altcoins. So you can see here how the entire market, not just Bitcoin, but the entirety of the cryptocurrency market, almost every chart we are looking at, has a critical level of resistance we are climbing towards. Now, as we approach these resistances, the potential for corrections become real, right? We have the possibility for corrections. We have a trigger point, however, where if broken, we should see that next leg up. So let's start on the cryptocurrency market cap over here. As we can see, guys, we've been in a downtrend since the 23rd of May, which is roughly around the same point in time Bitcoin created that top, around the 23rd of May, and we've been above that support, and then we broke below it into the downtrend. So around about the same time here, guys, we can see as Bitcoin has been in a downtrend, the total cryptocurrency market cap here has also been in an overall downtrend. Now, the total cryptocurrency market cap will need to break through two key points to see a reversal in this trend. This is going to be the downtrending diagonal trend line and the prior higher low at around 3.27 trillion. We can see that lines up perfectly as a point of confluence. If this level is able to break toward the upside, we will likely see a continuation back to 3.5 trillion, which will take us back to those highs. But most importantly, for us to see this, knowing that Bitcoin takes up the majority of the market in terms of market dominance, we will need to see Bitcoin push upwards. So for us to see the total cryptocurrency market cap break that level, Bitcoin is going to need to break its respective downtrend and resistance at 106.7 to 106.9 and this weekly downtrend to do so. If we are able to see the breakout here, we will as well have the breakout on the total cryptocurrency market cap, which will then provide a degree of confluence to increase the likelihood that we see these market-wide continuations. Now let's talk about worst case scenario and best case scenario. Best case scenario is that we see the breakout and we see continuations upwards. If we see that continuation upwards, this would be yet again a new higher low, an area of support, and we will likely see continuations up into our next levels of demand, which is going to be at that, or should I say supply, at 3.6 to 3.7, an area of resistance. So a macro continuation upward for the broader markets. If we're zooming over to the weekly chart, through that continuation, it is plausible that that weekly RSI could also come up to retest or maybe even breakthrough. I do not think we'll see the breakthrough unless we break through these highs at 3.7, but we might come up to retest this level, which lines us up for a potential positive momentum shift on the weekly, which could result in a larger directional continuation upwards for the market, following that of which what the 4-year cycle would be suggestive of, which is another move towards the end of the year toward the upside. So we can see how those dominoes are lining up toward the upside, but we do have some critical roadblocks in the way that we need to clear to even trigger these moves from occurring. If we're looking at the altcoin market, guys, a similar level of resistance is in play. That is going to simply be the prior higher low at around 5.67 billion. This level will need to break for the altcoin market to then fly back up to retest that $880 billion level, that baseline of the Ichimoku cloud. We could see a nice 10% gain all around for altcoins, so we'll see some nice altcoin performance if we do see that happen. If we do not see that happen, this will just be a lower high before we then see a correction back down into these lows. We do run the risk of that correction. So as you can see, the narrative we are starting to develop or have been developing is we are still in this wait and see zone, right? As Bitcoin consolidates between the range high in the weekly and our critical resistance on the short term, we are in this little pocket of indecision. The market is trying to decide whether or not it can sustain and show demand at these levels to then absorb the selling and continue higher, market-wide continue higher, or fail to do so and then suffer mean reversion after what has been a smashing move toward the upside. That is where we are sitting. So not much has changed in terms of the context of the macro charts. If we were to talk about how the macro charts were looking last week at this time, it is looking exactly the same, with the prices in the same spot. All that has really changed is what we have seen on the short term, and the fact that we are now 1 week further in time to where we were last week. Now, with that, it does pose new problems and new opportunities. That's a whole nother story we'll talk about later. So let's jump into the short-term charts and then we'll come back. So on the short term, like we mentioned, the critical levels we need to sustain above to see continuations is the confluence point between our prior resistance and our weekly downtrend. This is a level we've been discussing now for quite some time, and it's still going to be valid. It is very much valid, and it is going to continue to be valid until it breaks toward the upside. If we're looking at our critical levels of support, it is the same level, the simple level of these prior levels of support. Again, our prior horizontal consolidation drags forward. We can see again we've acted as support yet again. So again, a critical level of support which we'll need to sustain above. If we lose this level, we in turn lose the weekly range high, which results in the price closing below the weekly range high and the 62.09 in the RSI, which results in a correction into 100 again, potentially into 96, 98,000. So we can see how that lines up as well, again, in that wait and see zone. Between this range low and the range high, Bitcoin is going to continue to chop. It is an indecision zone. I do not see this as a victory for the bulls, nor do I see this as a victory for the bears. At the moment, we are still in indecision, and the weekly candle itself, the long-legged doji candle, proves that the market is still in a phase of indecision. It is only when we break these trigger points do we see dramatic shifts in the probabilities for continuations upwards aggressively or continuations downwards aggressively. Until then, we are just jumping and playing between these two key trigger points. So let's now zoom in and talk about the short term. So zooming into the short term, we can see the price action has been quite interesting over the weekend. Now, the weekend generally, we have these low volume environments, so the price is more susceptible to any sort of influence larger players, we're talking about hedge funds, want to have on the market. They can influence the market in the direction of their choice a little easier because of the low volume environments. That is not to say market manipulation or market makers. I don't really truly believe in market makers and manipulation. I believe there are entities that have their own personal desires and they try to influence the market in their own ways to try push it in a direction which they want to see for their own benefit. I don't believe that is market manipulation. I truly just believe that is how the market works. What I do believe is wrong is when we have insider trading, but that's a whole nother story. So I don't say this is market manipulation. I think that's a very big umbrella term that people toss around a lot and just goes to misinform particularly new people who end up believing that the market makers are out to get them. That is not the case. In this instance, what we have seen, however, is we have seen a slow and steady upward grind into resistance. Now, through this upward grind, we have seen a few things, and this is still present from our analysis yesterday. We have got falling CVD, which is indicating that buying pressure is starting to slow down. Number two, we have got falling momentum, so slight bearish divergence is developing over here, which is signaling the same thing. It is signaling exhaustion. So either selling is starting to pick up or buying is starting to slow down. And then again, we've got our red dot prints here in the market side of B, particularly in the short term, signaling that the bullish momentum on the short term is beginning to weaken. So we're seeing weakening bullish momentum. This isn't negative momentum yet. We are seeing weakening bullish momentum as we are losing buying strength, and potentially as some selling is starting to pick up as we move into areas of supply. So with that, we have seen a slow and steady upwards grind into these resistances, but it has not really facilitated in any sort of stronger correction. We've seen these smaller corrections into the 50 EMA, great corrections to capitalize on. But if we're looking for these larger corrections, we haven't quite seen that yet, as there has been just an aggressive amount of buying occurring over the weekend. Looking at this price action still, guys, again, we have to take it from face value. You cannot ignore momentum. We just have to trust momentum. This is how I trade. At the moment, again, while we have this momentum potentially turning negative over here, showing weakness, the potential for rejections at these points of supply begin to increase. Now, if we're looking for confluence that a short-term correction will extend further? Well, we're going to look at how the price has reacted to critical levels in the past, particularly the 50 EMA. We have held above the 50 EMA and we've bounced from it in the past. So we do see a loss of that 50 EMA. We could see a greater probability that we actually follow through into these lower levels of support. Again, the next level of support, if we do see a steeper correction, is going to be that 103.8 level, which simply maps out this lower point on the VRPV. Because if we lose this level on the VRPV, the sell side liquidity level, we then enter a larger range on the VRPV, which is a low historical resistance range, which increases the likelihood of a stronger correction. So anything below here is a safe short. If we drop below here, I do believe it will be a safer short, shorting below this region for a target into that lower range. But any kind of scalp trade, any sort of swing trade taken between or within this range on the VRP is inherently going to be higher risk, as there is so much indecision and chop developing within this range. The ranges and again the short-term critical levels are much more indecisive. So we are watching again for breaks into that 106.9 and above to be confident continuations. We are looking for breaks below 103.7 for continuations down, and anything between this range is going to be inherently a higher risk range where the price is more likely to chop. So to make it very clear one more time, the weekly continuation upwards triggers above 106.9. The short-term continuation upwards will trigger if we also break that level. The downward continuation below the weekly range high and potentially down into that $90,000 region will initiate below 103.7, as that is where the weekly range high is lost. A loss of that level facilitates more confident shorts for continuations into the $100,000 region. A loss of 100, of course, enters that VRPV range into like 98,000. So that is where that target comes from. At the moment, while we sit between that 103.8 thousand level and this high range, we are in a higher risk trading environment, as we have seen a whole heap of indecision develop within this range, and therefore we are in what we would consider a chop zone. The short-term directional fluctuations are a little bit more uncertain, so you need to zoom out and look at these trigger points to be more confident in when the price action is more likely to move in these aggressive trends, rather than these exhaustion grinds. So that is what we're seeing. This is just an exhaustion grind toward the upside. Very tricky to get a good understanding how to trade on if you are not scalp trading, and particularly if you are momentum trading it. Let's move over to the weekly chart now. Like we mentioned already, the risk of these corrections are very much present. We'll keep this nice and short and sharp. The weekly close has occurred. The indecision candle has printed. The risk of a correction is still present. The bulls, although maybe acting like this is a victory since we have seen a nice rally, it is not really enough to be confident on. Just like the bears might be acting like this is a victory, again, it's not enough to be confident on. The price hasn't really done much over the week besides a lot of weekly volatility. We are still standing by what we have said before, and we'll say it again. If we see the weekly RSI break 62.09, that is going to be acting as the trigger for a continuation lower, and will turn this local top into a local top, okay? Where we then run the risk of a correction down. Until we get that confirmation that we're breaking the weekly range high and thus turning this move into a deviation setup before a correction into mean reversion towards a 50 EMA, we run the risk of both, again, the potential for that correction like we just mentioned, and the potential for the price to reverse through and continue upwards. So both the potential move upwards and downwards are in play while we are chopping between this level. Simple as that. I wish it was more clear. I wish there was more clarity, but sometimes the market isn't clear and there is no clarity. Sometimes it is about planning and preparing for what happens next based on key trigger points that you identify on the charts, okay? The candle itself is showing us indecision, and that is the reality of what the market is. If we try to put our own subjective biases on there, sure, you can spin it in any way you want, but if we're looking objectively from what the chart is suggesting, this is what the chart is telling us. It is indecisive at the moment. The risk of corrections are not gone. They are still present. They are still very much there. We need to be aware of them. And what needs to happen for us to be confident in continuations upwards from the short term, from the total cryptocurrency market cap breaking upwards, from the altcoin market cap breaking upwards, none of this has occurred yet, which means we haven't triggered through the key resistances we need to be confident that this rally is going to extend further. And until we do that, we need to be aware of the downward risk. That is it, guys. Thank you for tuning in. We have to pray for the best, but be ready for the worst, okay? We're in a wait and see environment. I'll say it again, pray for the best, but be ready for the worst. That is how you need to trade these indecision zones. You need to trade based on an invalidation approach. Let's really quickly wrap it up there, guys. Thank you for tuning in. I hope you enjoyed the video. I hope it was informative. Again, I wish more happened in the week. Hopefully more happens this week. If we look at this weekly RSI and just drag it down, right, we really don't have too much time to be chopping around. We're really approaching this apexing point here between the 9th. This is going to be bringing us to the 28th. So it is very unlikely we push into the 28th and just like chop in here. In fact, it's incredibly unlikely we're just going to get another flat weekly close. It is much more likely we're going to get a directional continuation this week. I believe this week we will see either a strong move through this resistance, or we're going to see this entire rally push back toward the downside. One of these two things are going to happen this week. I don't think it's going to be dragged out for another week based on the momentum on the weekly here. We need to see a move this week. So thanks for tuning in. Big week coming up, and I look forward to seeing you in tomorrow's video. Bye.